Imagine waking up and seeing silver suddenly trading near $75, a level most investors didn't expect to see this soon. Just months ago, people were debating whether silver could even hold above 50. Now the conversation has completely flipped. The question is no longer whether silver can rise, it's whether this explosive move is real, or just another classic trap waiting to shake out investors. Because if you followed the silver market before, you already know one thing. Silver doesn't move slowly, it explodes higher. And then, just as quickly, it can collapse. And right now, the entire market is divided. Some believe this is the beginning of a historic rally toward $80, $90, or even $100. Others are warning that this could be a bull trap, a temporary spike before a sharp correction back down. So what's really going on here? To understand this move, you need to look at the bigger picture. Silver didn't just randomly jump. This rally is being driven by a combination of powerful forces building up at the same time. First, there's the macroeconomic environment. Inflation is still a major concern globally, even though central banks, especially the US Federal Reserve, have tried to control it with higher interest rates. Inflation hasn't fully disappeared. And when inflation stays high, investors naturally start looking for safe haven assets. That's where metals like silver and gold come in. At the same time, expectations around interest rate cuts have started shifting. Markets are now pricing in the possibility that central banks may begin easing policies sooner than expected. And when interest rates go down, metals like silver become more attractive because they don't yield interest, but they also don't lose value as quickly in an inflationary environment. Then there's the US dollar. Recently, the dollar has shown signs of weakness, and whenever the dollar weakens, silver tends to move higher. This inverse relationship has played a big role in pushing silver toward the $75 level. But that's just one side of the story. Another major driver behind this rally is industrial demand. Silver is not just a precious metal, it's also a critical industrial commodity. It's heavily used in solar panels, electric vehicles, electronics, and green energy technologies. And right now, global demand for these sectors is booming. Solar energy alone is consuming record amounts of silver. As countries push toward renewable energy goals, the demand for silver continues to rise. And unlike gold, which is mostly stored, silver gets used up. That creates a supply-demand imbalance. In fact, the market has been facing a supply deficit for some time now. Mining production hasn't been able to keep up with growing demand, and when supply is tight and demand is rising, prices have only one direction to go, up. But here's where things get interesting, and a bit dangerous. Because even with all these bullish factors, not everyone is convinced this rally is sustainable. Some analysts are pointing to warning signs. For example, silver ETFs have seen periods of outflows recently. That suggests that institutional investors might not be fully committed to this rally. And when smart money starts pulling back, it often signals caution. There's also the issue of volatility. Silver is known for sharp, unpredictable moves. Historically, it has gone through multiple boom and bust cycles. Big rallies are often followed by deep corrections. So the big question becomes, is $75 a breakout or a fake out? Let's break it down from a technical perspective. Right now, the $75 level is acting as a major psychological resistance. If silver can break above this level and hold it, that would signal strong bullish momentum. It could open the door for a move toward $80 and beyond. But if it fails to hold above 75 and starts dropping, that could confirm a bull trap. In that case, we could see prices fall back toward 70, or even the mid-60s. Support levels are extremely important here. The $70 range is currently acting as a key support zone. If silver holds above that level, the uptrend remains intact, but a break below 70 could trigger panic selling. Now let's talk about market sentiment. Retail investors are getting excited. Social media is full of discussions about silver hitting $100, and while that kind of enthusiasm can push prices higher in the short term, it can also be a warning sign. Extreme optimism often appears near market tops. On the other hand, institutional investors are more cautious. They're watching macro data, central bank policies, and global economic trends very closely, and their actions will ultimately determine the long-term direction of the market. Another important factor to consider is gold. Silver rarely moves alone. It usually follows gold's lead, but with more volatility. If gold continues to rise, silver could outperform and move even higher. But if gold starts to weaken, silver could fall even faster. There's also something called the gold to silver ratio. This ratio measures how many ounces of silver it takes to buy 1 ounce of gold. When the ratio is high, silver is considered undervalued. When it's low, silver may be overvalued. Right now, the ratio suggests that silver still has room to grow, but it's no longer as cheap as it was before this rally. So where do we go from here? There are 3 main scenarios. In the bullish scenario, silver successfully breaks above $75 and continues climbing. Strong industrial demand, weakening dollar, and supportive central bank policies push prices toward $80, $90, and possibly even $100. This would likely attract more institutional money and create a sustained uptrend. In the bearish scenario, this rally turns out to be a trap. Prices fail to hold above 75, selling pressure increases, and silver drops back towards $65 or $70. This could happen if inflation cools faster than expected, the Federal Reserve keeps interest rates high, or the dollar strengthens again. Then there's the neutral scenario. Silver consolidates between $70 and $75 for some time. The market takes a pause, investors reassess the situation, and a clearer trend develops later. For investors, this is a critical moment. If you're a short-term trader, volatility is your opportunity, but it's also your biggest risk. Sharp price swings can create profits or losses very quickly. If you're a long-term investor, the focus should be on fundamentals. The long-term outlook for silver remains strong due to industrial demand and supply constraints. But timing your entry is still important. And if you're new to the market, this is not the time to blindly follow hype. It's important to understand what you're investing in and be prepared for volatility. Because silver is not a stable asset. It's one of the most volatile metals in the market. And that's exactly why it attracts so much attention. Now let's bring it back to the main question. Is this a trap or the start of the next rally? The truth is, it could be both. Markets often move in cycles. Even within a larger uptrend, there can be short-term traps and corrections. A temporary pullback doesn't necessarily mean the rally is over. And a sudden spike doesn't guarantee a sustained move higher. What matters is how silver behaves around key levels, especially $75. If it breaks and holds, the rally is likely real. If it rejects and falls, caution is needed. Right now, we're at a turning point. The next move could define the direction of the silver market for months, or even years. So stay alert, watch the data, and most importantly, don't let emotions drive your decisions. Because in a market like this, patience and discipline matter more than ever, and one thing is certain, silver's story is far from over.